Hello traders, today is the 26th of April. My name is Neville Hornsey, market and YouTrading. Today I'm looking at a trend following strategy. Okay, we're coming into the end of the month, so there'll be end of month flows, there'll be some sort of mean revision, there'll be a lot of positioning ahead of the FOMC, but as soon as we get the FOMC, we get to sort of work out whether or not they're going to be as hawkish as we all believe, then we might get to an extended trend. We also have the phenomenon where, some people say sell in May and go away until St. Leger's Day, so we could get quiet markets. So essentially what I'm trying to do is make sure that we don't get chopped up in like these sort of ranges here that we saw at the end of the last year. So the idea would be to stay with the trend, or at least trade with a higher time frame trend if we were to go onto intraday charts. So this could not necessarily just be a trading strategy, it could just be a filter for how we trade for the next few months in terms of direction. So here I've got a Bollinger Band standard setting, so 20 period moving average with a multiplier of 2 on the actual volatility bands here. When we get to the lower bound, you can see that bars can close below or above. This indicator down here, the Bollinger Band percentage B, sort of shows when these bars close below. So the signal line is 0 or 1. And we can see here, when we go negative, that's when the close in this daily chart is below the Bollinger Band. And when we go positive above 1, that's when we get a close above this. So this signifies what's happening in price action against, compared to the Bollinger Bands. So we can actually delete or turn that off. We don't need to see that. And the idea would be to sort of trade sort of in an overbought, oversold sort of fashion. So when things look in terms of overbought here, the volatility is pushed to the extremes. We're expecting either a continuation of a trend or a reversion to the mean. So that's when we start to look for shorts up here at 1, and we look for longs when this indicator is below 0. So that's the sort of setup. And what I'm going to be talking about is essentially a setup, as we've just discussed with the Bollinger Band. Then I'll be looking for a filter, and then I'll be looking for a trigger. And the idea is that the setup obviously gets our attention and we start looking for a trade. The filter is going to be a 200 period moving average, and we're only going to be looking for trades that are in line with the 200 period moving average from this daily chart. So here you can see I've marked up many sort of signals from the setup, and a lot of them we can just disregard. So if I just go ahead and delete everything that is signifying a short above the 200 period moving average and everything that's signifying a long below. Okay, so applying that filter after the setup, we're now left with just a few signals compared to what we had before. And you can see here, we missed out on a lot of the initial price action when it went up and took out some swing highs, but we did sort of take in the sort of tail end of this upper move. However, on the downside, we got in a lot quicker, and we've essentially been trading lower as we go towards the 1.06 and to sort of sweep this swing low here. So that's the way we get a setup, look for a signal and then filter out any sort of trades that we don't want to take. Obviously, the trades that I've just deleted and the signals I've deleted may have been good mean reversion trades. So you might develop a second strategy on the back of this. Now, the next idea is to look for a trigger. So if we just go to most recent price action, just assume that we've come back to September 2021. We get a push up on the Bollinger Band, doesn't quite breach it, doesn't quite close above. And then here we have for the 2nd of September, a close above. And then we're looking for a confirmation that we should be actually hitting the sell button. So what I'm going to use for that is a moving average, and you can choose your favorite moving average. I'm just using 9, and I've used a weighted to try and smooth out the actual signal for us. So here we have the setup, looking for a short, the filter, that's good. We're price action underneath the 200 period moving average. We're not looking for a mean reversion. We're looking for a trend to continue to the downside. And now we're just looking for a close below on this daily chart. So end of day sort of trading, a close below the sort of trigger, which would be the 9 weighted moving average. So here you go. This is where we get our actual signal to go short. So we can take a short there. Now, the idea is obviously risk management and finding somewhere to sort of take profits. You can do that either with just straight up risk management. So we could put on a short position at the end of the day on the 7th of September. We could say that the next sort of previous significant high was up here. So that one, if we were to get obviously above the 200 period moving average, we should be considering closing out our trade anyway, because that's going against the trend. And then if we're looking for a decent risk reward, we're looking for at least a 2. So here we go. We're looking for a 2 between the period of 7th of September to the 23rd of November. We would have been in this short trade. We would have had a risk reward of 2, and that would have been a successful trade. Okay, we get another signal. Obviously, this trade's closed now, so we're waiting for the next signal. Here we go. We've got another close below, so it's actually down here. So at the end of the day, we look to our charts and we find that we've got a signal here. Looking for the next significant high and above the 200 period moving average. So this would be the significant high. This would be above the 200 period moving average. And then we're looking for a risk reward of 1 to 2. So if we look to the left, we'll be taking out the swing low, taking out the stops that are below there, and hopefully getting our risk reward of 1 to 2. Now, as you can see, during this trade, we had other signals. So maybe that's where you then move your stop. So in the first trade, once you got this signal, that's a positive in terms of it's going in our direction. So we can put our stop above there before it hits our profit target. And again, we had another signal here. So, rather than risking all of this price action all the way back, as some trend following strategies do, we could have locked in some profits and have a reason to be out, because this would be a reversal of this signal. So that's the actual trend strategy. We hopefully follow with a longer term trend. This keeps us out of mean reversion trades. If we are to use this as a filter, just to sort of go through and filter out trades at the end of each day, you could then apply the directional sort of trade to intraday, and hopefully we'll be able to get through this next few months where volatility and volume is probably going to be dropping, and we'll probably just be grinding essentially. So that's what I'm looking for the next few months. Hope you found that interesting, and I'll speak to you again tomorrow.